Hello everyone, this is Jim from Auto Finance. Welcome back to our channel. We are with you on 24th of June, closing the week video. On this video, we will just mention about some news first, then we will just go ahead with our charts. Alright, this morning we have received UK retail sales. As expected, there was a decline. It's actually a contraction, a 0.5 minus contraction in UK retail sales. And also we have received ifo business climate index in Germany, and that's also decline. Expected was 93 and realization report is 92. That is really low, and actually like a lowest time of since COVID. So why it's happening? Because of these high energy prices are just causing a lot of problem in European economies, and inflation is the major reason for that. And inflation is rising, but why? Because of these high cost of energy. So inevitably we are just heading to a recession if the oil prices doesn't go down. So this is a cycle. When there's cheap oil, production goes up, demand goes up. Then when demand goes up, not enough supply, and then we see recession. So it's all like that. So the end of the cycle of the demand curve is starting to happen. So in US, long trips will just happen, but then we will just see that it's just getting less. And then people will just start using their cars less, and then demand for oil will be less. So the price of oil will just come down, and then everything will just start to inflation to deflation in prices. Then recession will happen. It's this cycle. So this was the news. And then today we will receive new home sales in US. As expected, it will be down. Reason is mortgage rates. Right now the mortgage rates in US is almost 6% in 30-year interest rate mortgage thing. So mortgage credits. So people are just buying less home because the costs are huge. The payment monthly installments are huge. That's why they are just delaying their buy time. All right, and let's just start with our first chart. As you can see here, dollar index is just trying to stable on these 104 levels. Reason is right now really expensive dollar. It's also affecting the trade deficit of US. Government budget is just happening, so the competitiveness of US industries are right now so less. So reason for this, there are a lot of problems in the world. Let's look at China and Japan, Asia. Japan is struggling with demographic population and losing value yen, and China is struggling with real estate problem, and there are a lot of problems, and also some other internal problems like a zero COVID policy and other things also it's happening. So Asia counterparts are weak. In Europe there's a war, that's why European currency pairs are weak. So investor have only one choice, is dollar. They just prefer a gold and silver, but not enough supply on that side as well. Even these money port on that one, they won't get any physical gold. They will just know that it's a paper gold and it's not Latin. So if they say, all right, if it's paper, then invest in US dollar. That's why it's high. But as you can see here, there is a verge of, let me just show you something. It's just getting the playground. As you can see here, the playground is getting short and short. You see, the playground of dollar index is just shortening, and that means get ready for sudden moves. The volatility is getting less, upside or downside, but it's just giving signals of coming downside, and this will just help. A recession is just making recession fears are just making it stronger to downside. That was dollar index. Let's look at gold.
You are ready to win with us. GAN Market.
All right, our second chart is gold. As you can see here, gold is also just losing volatility. Let's just draw the same thing in here as well. As you can see here, we can just make something like this, and also from here to here. So in every market, as you can see here, there is less liquidity, so the prices don't change that much. That's why we see sharp moves. Let's just look at in here. It was a sharp rise, at the same time sharp decline the same moment, and the previous 4 hours, all the pins, the volumes and then the candles don't fill up. Only the pins upside or downside, sometimes in both of them, and then it's closing the same level. So in the markets, less liquidity because the money is just poured into interest yield income things, just like treasury bonds, just like some other ETFs. That's why we see decline. So, but what we can expect if we just see less liquidity and then spending some time here, if the risk of recession just goes higher, then we will see decline on that as well. All right, let's look at our last chart. All right, our last chart is US oil. As you can see here, crude oil is on decline. This is the second week of loss in a row. And on the first week, we have seen this decline. And then on this week, we are just seeing this decline. It's just like making step by step. As you can see here, it has spent some time on the last day of the trading. And we have seen that people didn't want to risk their portfolio on the last Friday. We have seen a sharp sell-off. This was that sell-off, and this week we have seen this. So in the US trading session, on US trading closure, we can see another sell-off if this resistance level doesn't work, and then as a support, and then if it just gets rejected, we will see another decline on that. And also the charts also just preparing for that. Let's look at it. It was just like in here, RSI was 24, and just right now, and just a few dollars up, but RSI is 40, 43, 44 right now. If it just it goes like here, so it will be something like that. It will be something 60. RSI will be 60, so we will say, all right, it's getting closer to overbought territory. Let's sell it, and then a sharp sell off until to $100 critical and psychological level. That's possible. That's why just watch it out and then see that, because the same volatility issue is happening on here. Declines fast, but rise are limited. So step by step, we are getting closer to recession, because if there is no market, if there's no volatility, no rising prices in the market, is a common saying. If it doesn't go up, it has to go down. That's the cycle of the market. Thanks so much for watching us. We will be together on more news, and then we will cover more charts with you on Monday. Have a nice and good weekend. Bye.